The cup started at $50 in 1980 and went down to about $4 in the early 90s. Then it started to come back up to 2011, almost to the top. It doesn't preach, but it comes down in consolidation for the handle. And now it's at about $44, very close to moving back up. The way that works is that once you breach that level, the top of the lip of the cup, the 50 level, there is no resistance at all. But the way technical charting would work is that you take the difference between the top of the cup and the bottom, which is about $46, and add it onto the top. Your next target upside would be $96. Is that crazy? No, it's not. I mean, it's 3 digits. People should expect silver to happen. Today, silver's story isn't only about its price, it's also about its history, technicals, and a change in the way the world finances itself. If you look at the long-term chart of silver, you'll see that a 45-year cup and handle formation has formed. It started at the peak of $50 in 1980, dropped to the lows of $4 in the early 1990s, and has been steadily climbing back toward the rim. Technically, breaking through the $50 level would mean there is no resistance above, setting the next target near $100. On top of that, the US government's decision to reclassify silver as a critical mineral shows how the groundwork is being laid for a generational move. Adding India, Russia, China, and Saudi Arabia to the mix makes the significance of this moment clear. Andy Schectman, the CEO of Miles Franklin and a precious metals analyst, has long said that silver is the most undervalued asset in the world. He points out that institutional traders in the US are finally paying attention, while the general public has not yet joined the rally. This difference is what creates asymmetric opportunity. Little danger of loss with a big chance of gain. Schectman says that rising premiums, shortages, and high demand from both governments and private institutions suggest that the rules of the game are changing. If gold has already been reintroduced into the monetary system, silver may be the next domino to fall. With deficits rising, trust in fiat money falling, and metals pouring into COMEX, it may only be a matter of time before silver's role is fully repriced. Now we present clips from Andy Schectman's interview. Before we continue, please subscribe to our channel and turn on the bell icon for timely updates. Thank you and enjoy the video. The amount of silver that is pouring into the COMEX is just too much for a technical formation. You have a 45-year cup and handle that might be one of the most powerful patterns in technical analysis, especially for something as old as silver. The cup started at $50 in 1980 and then went down to the bottom, which looked like a bowl or cup, to about $4 in the early 1990s. It started to come back up to 2011, almost to the top of the cup. But then it came down to consolidate for the handle. Now we're at about $44, very close to moving back up. The way that works is that once you break through that level, the top of the lip of the cup, the 50 level, there is no resistance at all. But the way technical charting works is that you take the difference between the top of the cup and the bottom, which is about $46, and add it to the top. Your next target, upside, would be $96. Is $96 to $100 crazy? No, it's not. I mean, it's 3 digits. Silver is something one could expect at some point, and then when you realize that the government reclassified silver now as a critical element, a critical mineral, they've put a floor under the price of silver. And so I think, all of the talk over the last 6-7 months, and I said no from the get-go. This is not about tariffs. Never was. It was a ruse to bring it all back. This is reshoring. This is understanding that the biggest money in the world understands the significance of things like silver. The biggest traders here in the United States the institutional traders, when they start to pay attention, when they start to accumulate, we should all pay attention. We've been talking about this on a central bank level for a few years now, about the deliveries into COMEX for a few years now, about the accumulation by India, by Russia, by Saudi Arabia, by China. China flying around the world and buying ore when they're the second largest producer in the world, sending it back to China for refining. Why would the second largest producer of silver in the world find it necessary to fly to Latin America to buy concentrate and ore directly from a miner, pay double what the West will ship it back for refining if it were just this, this rock that hasn't done anything forever? And I don't know, silver right now feels to me like gold did about a year ago when it was right in the $2,100-$2,200 range, and it kept trying to break out and would, consolidate and try to break out, come down, consolidate in a long period of consolidation, and then broke through. And it hasn't looked back. I would say that's about where silver is right now. I look at it as the most undervalued asset in the world. And now evidently, the United States finds it significant enough to call it critical. I think there are very few opportunities asymmetrically, where you have such low downside and such high upside, being asymmetrical for an asset like this. It's once a generation. So I think the drivers are big money waking up. Now you could argue that the public is not even part of this rally yet. What happens when they collectively wake up? This is being driven by people at the highest of levels before the public catches on, which is another contrarian indicator. So yeah, I think what's driving gold and silver is that silver is finally catching up. Gold is being rewoven into the monetary fabric of the globe. And thankfully, someone in this administration, I think, grabbed President Trump and said, if we don't do this, we will forever regret it. This is our last opportunity to bring some of this home, because the world is moving away from treasuries and dollars and paper promises, and then you add on to it sanctions and tariffs after 4 years of nightmarish domestic on foreign policy prior to this administration. You could argue a system that is fully based on trust has squandered the majority of it. And then, look, I would vote for President Trump again, but I don't agree with the way he is antagonizing even his allies like India, as an example, throwing on 50 tariffs and many of the other countries in the European Union and Canada. Maybe there's something bigger at play, which we've talked about a lot, but I think it's just beginning, quite frankly. Look, you have a comment coming out of Goldman Sachs a couple of weeks ago that if the market even thinks that the Fed has lost independence, well, okay. The firing, Elisa Cook, who's going to go in there, it'll be a Trump bobo. You look at Stephen Muir and replacing the last point, Fed official who is the author of the Mar-a-Lago Accord. The Fed has lost independence, and mind you, this is nothing new. You go back through history, you'll see this happening with multiple presidents, but it's like they give you crumbs and the crumbs. Well, we told you that this could happen, and now you have, banks talking as high as $6,600, $4,000 being base case for most of these banks. Look, you put silver at 5,000, like Goldman says, and divide it by 70, which would be, way higher than its average for the past 100 years, and still 10 times higher than it's coming out of the ground at. You're talking 75 silver or thereabouts. So to me, this is just beginning, Elijah. Honestly, I do believe that. And I think this is the time that most of us have been talking about as, typically following suit way early, but I'd rather be months and even years early than 60-second plate when the switch flips on us You have, as we've talked about at length, 11 states already that recognize precious metals, many of which is specifically gold and silver. Eagles has legal tender, and the US Mint can't keep up. So the primary distributors who buy all of the large shipments from the mints, when the mints run out of product, the primary distributors now become the de facto market makers. And it's a function of supply and or demand. Spreads are very high right now because the price is getting higher. I remember, just a few years ago, like even with 1,500 gold, you're talking 30,000 for a tube of silver eagles. Now they're almost 80,000. And so cost of inventory is getting higher margin. Our premiums are going higher. And there's volatility that we expect to see based upon what we have seen for a very long time. But maybe the rules are being rewritten. Maybe things are changing. Maybe the government for once is going to let the price go higher instead of stepping on it through levered futures contracts. Maybe this has a lot to do with all the metal coming back, the reclassification of as strategic or critical, all of the talk of gold being woven into the back end of the treasury market. He who has the gold makes the rules, says Trump. There are a lot of reasons to think that maybe this time is different now. Usually when you hear that, you should run this time is different. But I will say, it does feel different. Ultimately, we'll have to see how it plays out. But I don't ever remember in all of my years doing this, Elijah, which is almost 36, seeing a market with this continual strength, and every time it's hit, it just comes right back. That is a characteristic. That is certainly new. And it feels like, they're just going to let it go much higher, in particular with gold, making the revaluation at some point much easier and increasing the value of the holdings that they have. And if they really are going to revalue it, like a lot of people talk about, myself included, James Rickards, Mike Maloney, the Federal Reserve, Senator Lummis from Wyoming. Keep on going on. Judy Shelton, if they do starting from a much higher peak or plateau from a much higher base, would be beneficial to them. And when you see banks saying, okay, now it's 4, now it's 5, now it's 6, they keep on raising their targets, which is interesting. And